Pete Johnson right now. After a really long time, he joins us on Closing Trades. Dilip, good having you. The show missed you. Wish we can have more often. But
you can say that even I missed you all.
Okay, great, Dilip. Put the earnings into perspective, Dilip. I mean, I'm jumping straight to the gun because we have just about 15 minutes left. We are awaiting Tata Motors. What do you expect the big boy to do? Because Auto's performance has been a mixed bag. Maruti and a few others have been okay. Some other companies have been slightly lackluster too.
Well, I think Tata Motors, I think the performance of JLR is something which is what is going to really drive the entire performance. We all know that the commercial vehicles had a very tough time, and probably there is some recovery in sight, which is what we are seeing in the last couple of months. But as far as the results are concerned, I think probably I don't think there should be a huge disappointment for Tata Motors as such. We still think that Tata Motors maybe this quarter may not be really up to the performance, and even maybe the first quarter or second quarter till the time that the JLR plant in China really becomes functional. So that will be the intervening period during which probably the performance and the volumes also may suffer somewhat. But by and large, I think this is a stock which probably can go places even from the current levels. I think it is a stock which can give a very decent appreciation of at least 25-30% from the current levels.
Okay, but there is concern, Dilip, about how the sales in China may be impacting the JLR contribution from China may be slowing down, and that may impact overall view on the stock as well as earnings. Is that a concern and a valid one at that?
Well, I think once the, right now they have been shipping a lot of vehicles right from Europe into China for selling. So the margins over there are much lower. Now, once the Chinese plant really comes into play, I think that is where the margins are going to improve and even the volumes will improve. So I think that is what I just said, that this is a slight transition period. Of course, that is a matter of concern. As what I said, maybe 1 or 2 quarters more, probably it will still be muted and may disappoint maybe to some of the optimistic guys. But I think overall, this probably, in my opinion, has to be taken in stride. For a slightly longer term, I think it still merits a great look.
Okay, those are the big numbers that the market will be keeping an eye out for post the trade coming shutting down for the session. But Dilip, I just wanted to get your view in for the big stock story of the day, which is really Dish TV and first quarterly profit in 5 years. Patience being rewarded essentially from investors. When you look at the numbers, do you see that at 100 this is still a high conviction buy?
Well, I think the revenues are really coming in. The numbers are really good. The volume numbers are really going up. So the subscription revenue overall is really improving quite dramatically. And as what you very rightly said, it is all getting reflected in the bottom line, which we have seen also in the last couple of quarters. So I think even from the current level, as what we see is that capital intensity of the business is not so high, and the kind of cash that they are going to generate over next couple of quarters is very encouraging. So putting both the things into the perspective, I think yes, certainly this even from the current level can give a reasonably good appreciation.
And I'm just a bit enthused to ask you how much more upside would you give to the stock, given that the management has indicated that even 100 crore profit in FY16 seems conservative?
Well, I think I would still target for at least 35-40% depreciation from the current levels. Not to forget, the stock has almost doubled from the lower levels, and that too probably, if I'm correct, in the last 6 to 8 months. Though it had been a late starter, it did not participate so much in the early round of the bullish momentum of the market. So I think considering the fact that it has already almost doubled from the lower levels, I think another 35-40% is fair to assume.
Dilip, the other thing is, we were looking at the list of stocks which are trading at fresh highs, and all of them have that good result cues for themselves. So, I mean, a Dish is a case today, but we look at UPL or United Phosphorus, splendid move, good results. Voltas is climbing as we speak, and ever since it's come out with those good numbers, it's not gone behind. Welspun Industries or Welspun India, as the case may be, again, great numbers, and the stock is getting rewarded, trading at fresh highs. Rico India, our fourth one. I mean, I can go on with names, but good numbers are getting rewarded. What has stood out for you in this earnings season? Anything that came out with numbers that made you feel that this is an inflection point for the company, so to say?
Well, I think Voltas is certainly one of the stocks that really inspired us. I think the numbers were pretty strong. And even going forward, I think if we were to take each of the verticals of the business, apart from the air conditioning segment, I think even whether you talk about the MEP, which is the infrastructure related, which is more export oriented, I think some of these sectors, the earth moving equipments, or whether it is the textile machinery trading, I think all these things probably will have started gradually looking up in terms of the prospects. So I think Voltas still is one which I will buy in the even from the current levels, and I think we can still expect that over the next couple of years it will still show a bottom line growth of around 20-25%, and I think the stock still holds a great potential for appreciation.
Is with us, Dilip. A thought here. Okay, I think Dilip, yes, a thought from you first on BHEL and the numbers and whether it has any meaningful impact on the stock.
No, very frankly, I don't think so, because we all knew that the journey is one of southwards in terms of the top line and in terms of the profits. I think there is nothing surprising about it. Maybe it could be a tad more disappointing, but more important is that how is this new year going to pan out in terms of the order intakes for the company. So I think that still remains a bit nebulous and bit hazy at the moment. So I don't think that people are factoring so much about the performance which has come. More important, what is the management commentary going to be on the landscape over the next 3 to 4 quarters, whether there is going to be some conspicuous improvement for BHEL or not, and I think that is probably will decide the direction of the stock. But otherwise, I think the stock probably fully has priced in some of these things. There could be some correction maybe in next 10-15 days, possible. But otherwise, I think this would be the level to gradually accumulate some of these stocks.
Okay, gradually accumulate.